to the sector of the day, which is metals. And, the industrial metals all rallied, as we highlighted in the morning. But, even steel is doing very well. So let's get the lowdown with Nigel. Nigel, over to you.
All right. Well, let's run you through first the global tailwinds. Why are metal stocks on fire? One is there's hope that inflation is well behaved now. So the Fed goes ahead and cuts rates. The Chinese stimulus continues and various measures are being taken in, both from the central bank out there as well as the policy moves out there. So that's good news. And there's also some supply constraints. For a metal like copper, copper moved up by close to around 5% overnight, and now it's at its highest levels we've seen in more than 2 years at around that $11,000 per ton. There's a short squeeze as well on the trading front, and that's why, in fact, we are seeing a further up move out there. And there's strong demand for some of these metals because of the green push. That could hold them in good stead. So if you're looking at the EV side of things, you're looking at solar panels as well, silver will find some usage out there. And it explains why silver is now at the highest levels we've seen in the last 11 to 12 years odd. Even year to date, actually, silver is outperforming what gold has done. Gold is up roughly around 15%, silver is up nearly around 25% odd. So that's the backdrop, and those are the tailwinds which is helping metal stocks. Let's break this up into three then: Vedanta, Hindustan Zinc, and then the ferrous names. First up on Vedanta, it's a diversified commodity play. If you want to play a little bit of aluminium, zinc, lead, it's got all of it out there. So that's why, that's the diversified commodity play that the street has been working with, and the stock has nearly doubled in the last 2 months or so. When metals does well, then the worries at the promoter end, well, they go on the back burner. And the promoter's in far better shape, and you like that. Now, valuation-wise, even after such a big run, well, the stock trades at around 6 times EV on EBITDA. It's not very, very cheap, but it's not very expensive as well. 6 times EV on EBITDA for a global metal company, well, that's par for the course. Given that the promoter is in better shape, when the promoter is in a bit of a tizzy, then you give it a bit of a discount. So that's about Vedanta. Next is Hindustan Zinc. It's the only listed play on silver. Silver contributes close to 20% of Hindustan Zinc's revenues. On the EBIT front, it contributes nearly around 45%. And the margins on their silver sales are nearly around 86% because it's a byproduct of their business. So that's why margins are so high out there. And to give you a couple of numbers, silver prices on average for last year was around $24. Currently, it's around $32 per ounce, and we're already just a quarter into this particular financial year. But the point to note is also that the float is very limited. Only 2% of the total free float is in the market. Government of India, Vedanta, as well as LIC, they have 98% in the company. And they're looking at ramping up their silver production as well. So it's the only listed silver play, and that's why that stock has done very, very well. And finally, the ferrous companies. Why are they rallying in today's session as well? Remember, the past quarter was quite weak. But now the street believes that coking coal costs will come down by roughly around $20 to $30 per ton, and steel prices are higher as well. So it's a double whammy in the right direction. Because you have steel prices that are moved up, and you have the input costs that are moved down as well. And that's why Jeffries, that chart should come up for you on the screen. They are saying that they are working with nearly around 2,000 rupees per ton improvement for JSW Steel in the coming year. So put all this together, metals are on fire, base metals as well as ferrous plays. Dipan Mehta as well.